Sanghavi is with us, Chief Investment Officer, Equities at Mahindra Manulife Investment Management. Krishna, good morning. Great to have you with us here. Prashant here. I mean, by the way, the market's coming off a little bit. So just about 40 points left now after the massive move we've had from the lows. The question, though, Krishna, is even after, whatever, 4,500-point rally on the Bank Nifty, 2,000-point rally on the Nifty from the lows, I don't think it's wrong to ask whether we're completely out of the woods. How would you answer that question, Krishna?
Yeah, hi, Prashant. Actually, markets have taught us that it's clearly impossible to, categorically say we are out of the woods or not. But let's look at the factors, right? So what we've seen in last 6 months, is a multitude of factors. If you look at pure fundamentals, we had a little bit concern on earnings, on economy not, growing as expected a year earlier. The kind of data points we got for Q2 and Q3 was honestly a bit weaker than what we really want as economy. You look at a little bit on the flow side and sentiment side. Post election in US, the expectations rose about how US economy can do well, US corporate earnings can pick up because of tax savings, etc. So that's the reason, why across the EMs we saw money moving out and possibly heading to US as a preferred option for some time. And third really was, a little bit pure India-specific liquidity angle, which you call it, about how, new rules of, derivatives, etc. were being played out, or margin trading, etc. So if you look at combination of all three, we saw markets, behave the way they did. Come to, let's say, March this month, I think, the worry started in US actually on the reverse side, saying that if they really implement Dodge and if they really implement tariffs the way they plan to, some sort of a worry on US corporate earning growth stroke economy. So that reversal of EM money into DM possibly is what could have reversed is one. And from a economy side, the budget was pretty interesting. We got this this consumer surplus kind of thing and government's action. On top of it, RBI did its own support by way of rate cut, as well as really indicating their willingness to do that extra to really support the growth. I think that factor has changed. The only thing missing in this, really is the pace of change, which is quite fast in a sense. If you just look at last 7 days, we would have rallied nearly 2,000 points. That typically comes more in a rebound or a oversold kind of market. So let's see how it plays out. I think data-wise, quite a bit of oversold or short position would have been reduced by now. Let's wait for Q4 season and then judge based on what the management commentary comes out of economy in 26 for their own companies, as well as little bit support from global markets is required. Last thing, maybe let's not forget, April 2nd is still a relevant date. So that's what we're likely to see some formal announcement from US on the tariff, etc. And how India as a country, stroke a lot of other countries, can get impacted. Can be another things to monitor and then possibly take a call later on.
Krishna, hi, morning. Good to have you on the show. So financials have, become the face of this move that we've seen, right? The recovery from the early March lows. What is the weightage that you're willing to give financials in your portfolios and within the basket, because it's a very wide basket? What is your preference between banks, NBFCs, private sector PSU, obviously insurance, capital market players? There's a lot going on there. So just give us the details.
Yeah, sure. So I think if you look at broad positioning financials, clearly it's more domestic economy driven, so would likely to go overweight for now. Basket is huge, whether you call it private banks or public sector banks or lenders. So broad thought really is they'll have relative preferences, partly coming from the kind of mandates we run in each of our funds. As quite a bit of large cap has more of banks and NBFCs, while capital market plays, etc., are more into mid and small cap kind of schemes. So broadly, as a house, some of our schemes will be overweight more in capital marketplace, somebody more into NBFCs or financials. So I think combination is what possibly makes sense to be overweight for now.
Hi Krishna, the problem is that Q4 earnings are not going to be great. The hope is that after that we'll see that that earnings will be good. We'll have a low base as well, which will play out. Do you think the markets are prepared to look through a weakish to a muted earnings in Q4 and just be happy with the positive commentary that we're likely to hear? Your take?
Yeah, again, it's difficult to pre-guess, whether markets are ready for all the bad results or weak results. I think some of the companies which have corrected sharply in last, 2-3 months, possibly, those Q3, so those Q4 outcomes is, perhaps captured is my guess. Somewhere, the intensity of the numbers stroke the commentary for FY26 possibly will be a far bigger play. Come to think of it, yes, clearly in the month of March, where we are now, and by May the results are out, more or less markets will be more in a mood to see what they have to say, and report about FY26 outlook rather than so much about Q4. So it will be a mixed bag, I guess. For some companies, if the intensity is pretty poor in terms of numbers of Q4, it might be worry, but otherwise broadly it looks good. Especially for large cap, it looks far better.
Okay, all right, Krishna, let's talk about the two top sectors of the day in the first few minutes. One is tech, where we have seen that index being an underperformer. That's actually outperforming this morning. It's up closer to 1.5%, while the markets are more or less flattish. As well as cement, which is the inward-facing sector, right? Irrespective of what's going to happen on tariffs, the cement demand is more domestic in nature. How do you approach both these two sectors, and what's your current stance?
I think cement is clearly demand is reasonably good. If you're betting on India capex cycle, demand-wise, cement is a pure play commodity which is required, can't be imported. So a domestic play, as you suggested. So clearly positive, overweight call on cement is something I'll say. IT, it's been an underperformer for last, let's say, 2-3 months. In a way, if you look at again the IT cycle of last 6 months, it was stark outperformer as expectations built up for how US economy can pick up in October to December time. IT was a stark outperformer. Once a little bit worry on US came stroke, the tariffs. So if I have to really, make a view on IT, I'll prefer to say, let's wait till 2nd April does, IT come into some gamut. I know it's not a product, so, tariff is difficult to be use the word there, but is there something else, which might come to possibly, is possibly a worry right now?
I just want to quickly point out that for the first time, I think in at least 4 or 5 days, and 4 or 5 days is how long this market has rallied non-stop, and in a very powerful way, market breadth is turned. This is, again, I mean, we've been trading for half an hour, not even half an hour, and market gains are there. I mean, 65 points in the Nifty, but look at the advanced decline ratio. So 1,400 stocks are lower and about 1,000 stocks are higher. It's nothing dramatic, but, we've had a one-way move, as we've been pointing out, and now you're heading into that, as Krishna has also been pointing out, the 2nd of April. And who knows, if anything, there is only, Trump and his team have been creating chaos and confusion with statement after statement, sometimes meaning this, sometimes meaning that. So very little, there's no firm handle on the extent of it and what may actually happen. Once again, I think this came through clearly in one of the discussions. The impact on India is indirect through weaker global growth, weaker, if tariffs are higher. It's not directly with regards to tariffs imposed on India, even if India has come up in Trump's speeches, etc., multiple times over the last 2 months or so. Look at the market Nifty heat map as well, more evenly matched now, equal number of gainers and equal number of losers as well. Finolex Cables is another one which is up about 3.5%. It was not there in the mix in the morning and we started, and it's the number one volume-led gainer. And look at two other names which were absent in the morning. HEG is up 13% now, so it's gone up like a rocket. Of course, along with it is graphite, which is up 10%. So HEG and graphite are both surging as we speak. Those are sort of new additions. As I said, still early, just 15 minutes into market open at this point in time. What we'll do is we'll take a quick commercial break here. Krishna, thank you very much for joining us here on the program. Appreciate your thoughts.